Good morning, everybody. How you guys doing? Happy weekend. Nice. Hey, John. Feeling better? I didn't get another allergy shot this weekend. I mean, last week? No, it doesn't do shit. It's like immunotherapy. It's not actually like an allergy shot. Over time, it's supposed to make my allergies better. So far, it's done absolutely nothing. 8 months in or something. I could have just been taking shots of tea and getting jacked out of my mind. At least it would have done something. Carl's wife would have been. Invite me, please. Does immunotherapy get worse before it gets better? I think it's just pseudoscience at this point. I'm not sure the world can handle roid gherk. Hmm. I mean, probably just like a light dose of HGH. I'm not gonna go full steroids. Homeopathic shots. I don't know. It seems like it. They gave me an allergy test, and it was definitively worse than the prior allergy test before I started immunotherapy. How often do you have to get it? Most weeks, just once. Yeah, it was pretty awkward. Winning? I don't think so. I know it's not pseudoscience, but I'm not even getting like a good placebo effect out of it. Bravo. I think your projected move tickers were 5 out of 5 this week. Were they? Let's see. Let's review how awesome I am. I could definitely get on board with that. So what did we have? We had AMD. Yeah, that definitely shot the bed. AMD short. Monday, I wanted to short Netflix earnings. That was a great choice, obviously. Then I shorted Nvidia on what was that? Tuesday. Tuesday for the Nvidia short. Then I updated my Netflix short the night before earnings. That was it. So it's 3 out of 3. The AMD play was awesome. Fuck yeah, it was. You're too cynical for the placebo effect. I mean, I had to have believed at some point, right? That's why I'm going getting jammed with needles every week. Upturn Monday or more slow grind SPX 1000. Um, well, SPX 1000 is still very, very, very far away. Could Tesla hit the 120s on bad earnings? I mean, Tesla's getting pretty close to just falling off the map entirely. I think the goes long the whole chain on. Like we'll go over it in a little bit, but yeah, Tesla's in bad shape. I'll cover that with the rest of the like Mag 7. Mag 6 without Tesla. Nvidia dropped by 10% on Friday. It's about to become the Mag 5. Lots of earnings this week. Yeah, this is the first big week of quarter one earnings. So we've got oh fuck. I think we have Tesla, Meta. Hmm. Let me double check. We got Tesla, Visa, UPS, Meta, IBM, Boeing, Microsoft and Alphabet, Zom and Chevron. So yeah, big earnings week. I'm sure it'll have some effect on things. My thoughts are lowered forward guidance in most sectors. And to be fair, guidance wasn't that great in quarter four earnings either. So we'll probably see, like, broadly, we'll probably see guidance trimmed even more over the majority of the S&P through this earnings period. Tesla on the week up since the obvious play is it should be down. Yeah, that's not how the fucking market works at all. Sometimes the obvious play is exactly what the thing does. Actually, more often than not, the obvious play is the correct play. Stop being so contrarian that you're inversing your own contrarian sentiment. I mean, oil earnings should be pretty good. We've had higher oil costs over the last like 4 months steadily. And the last earnings period was reporting from like that slump in oil through October, November. And that'll be gone on this round of earnings. Tesla earnings is next week, so guidance will make a difference. Why? Tesla just lies about their guidance. I think everyone's aware that they're just a bunch of fucking liars, right? Like, oh, we're totally gonna have self-driving cars, and reducing the price of our cars massively isn't gonna ruin our margins at all. What else did they lie about last year? Oh, don't forget that they're still trying to push to pay Elon 52 fucking $billion. Where's the SPX bottom? If I knew, why would I tell you? Try this again. May 10th. Spy Strangle. SPX too expensive. 507C 485P. I fucking hate the dates you pick. I want you to know that. $507, $485. Okay, it's slightly better. It's definitely better than the last one you gave me. The last one was fucking awful. But that's gonna need, let's see. So May 10th, 85, 510. So let's see. End of day Tuesday. You would need a 200 basis point move to the upside or 140 bit move to the downside. Into expiration, you need 3.3 to 4%. Your break even on the downside is at 478. Break even to the upside is at 516. Which is a reversal. I mean, but you're just break even on a complete reversal. And on a breakdown, you need to lose historic support at 483 and test the historic support at 469 to hit profitability. So, no, still garbage. What's wrong with my dates? I mean, you're picking like weekly contracts, which is disgusting. Illiquid, wide spreads. The fucking OI on your put is like 6,000. The OI on your call is only 1,900. You're also buying the call in like at 16.4% implied volatility, right? Well, 14.7, I guess, on the call, but 18 on the put. So if vol crushes, you're gonna get even more fucked because your distribution is gonna shrink, right? And your chance of profitability is gonna become even lower. Shoot me. I don't care about Geo. Why do people keep asking me about that? Earnings on Tuesday. Should I sell? I mean, I can't tell you whether you can sell or not. That's up to you. The current trend looks pretty strong. What are earnings expectations? 20 cents a share. Margins aren't really recovering because quarter three sucked, but they're kind of flat against. Now, I guess a little bit above trend. There's a slight recovery in their margins. They need more margin expansion. I don't see any reason for them to do poorly, though. I mean, we're definitely not living Burry's dream of suffering through a financial apocalypse where crime rates are skyrocketing, which is why he bought this, because he's a conspiracy nut. Like Burry's play on this isn't that they were gonna go into like house arrest beeper systems, right? It was that financial markets were gonna collapse and crime rates were gonna skyrocket. and demand for prison land for prisons was going to shoot through the roof. And yeah, Burry wants Gotham City. And so none of that has happened, right? But the company has done some legwork on their own to improve their margins, specifically by getting into getting into the like house arrest business. And I think they're providing like the little ankle monitors. And they're making some like more consistent revenues through recurring payments for that service, and that's been helping them kind of improve their margins a little bit. But on the prison side, not so great, right? Currently, most people have more money than they ever had. They just are also spending more of it. That sounds really bad for 2027. Yeah, I mean, well, if you're in on that side of his thesis, then the holding period is quite long. But if you're up and you want to take profits, that's always an option. I don't think they did very well in like prior market corrections. Yeah, it took a pretty. They never really even recovered after the COVID crash until now. But I mean, this is accumulation. It may be choppy, but it does look like more and more investors are getting on board and going long. QQQ hyped more than SPY or worth the productivity gains. QQQ's just more illiquid than SPY, right? I mean, I think a lot of the gains in QQQ, I mean, are just because of its increased sensitivity to tech. Productivity gains are just inflation. There's been no actual change in productivity. Give me 1 second. All right. Sorry about that. Just had to take that call. Are you winning off QQQ shorts or reducing rolling losses since October? I haven't been short very much since October. I pulled back almost the entirety of my short positions in November. I went long on the market largely in Jan, and then added to like Vega positions, but I mean those are really vol sensitive. They're not price sensitive. And around March, I rolled a pretty big chunk of my June vol position out to September. Those are doing quite well, obviously, with volatility up, from 12, 13 up to, VIX is like 18. I think 3 month vols at like 19.25. So I mean, those are doing quite well, but I've scaled back, well over 50% of that position already. I do have QQQ shorts, like 400 for March. Those are doing pretty good. I mean, they're up a bit. I bought them before most of this most recent leg of the correction happened. But I'll probably start scaling out of those as well this coming week. I kind of want to see what direction we're going to take. I'm synth short SPX at 52 and 5100. Um, Larger position at 52. 5100 is not very big. That's kind of unhedged. I should probably be beginning to pull that back, but I got a little greedy over the weekend. I have an at the money, well, near the money strangle. That's hedging at least an initial move to the upside in case that happens. And then I could always go long ES to cover the rest if I need to, while I try to get out of the short calls. Do you happen to know how the preferred shares of BNED will work? No, I don't think it'll matter for you. Do you only need to hold one share and you can pick up as many as 5 cent shares? I don't think they've announced any of that yet. That'll be all part of the offer when the offer is brought to bear, which it has not been. Right? Like, that is everything they announced so far is still speculative. That's why I like loaded up shares at fucking 20 cents because currently none of that is approved yet through the board. Like that has to be approved by the board and the shareholders, and then once it's approved, you'll have more details. Did you get caught micro cheating again? I don't fucking know, man. CVNA is still good for selling bear call spreads around DN. Um, it's a little more volatile, but hmm. Let me look at the options on it real quick because I didn't really get a chance to look at that this week. I was busy with other stuff. I mean, delta neutral's at 67.25, so it bounced slightly above delta neutral or off delta neutral the other day. Um, Call interest is picking back up on it. This might have kind of exceeded its downside move for the time being. I would say that it's a bit oversold and looks like it's slightly recovering. That could break down again if indexes continue to move down, but it doesn't look all that bearish anymore. If it falls back below 67.25, 66, then it might be worth a short again. Otherwise, it looks pretty stable. I don't know if I'd want to sell bear call spreads on that. It looks kind of dangerous. They were really good before, but not so great now. And I would say that there's probably a small recovery in here, and then maybe if the rate environment persists, a larger move down to like that 50, 53 level over time. They said in one of the SEC filings that we're going to give the 0.05 offer split 900 million among current shares. Sounded like each share would allow roughly 25 new shares purchasable. Okay. I think it still has to be approved by shareholders. And so that's still pending, and then it may be modified by then, right? So far, no liquidity's been distributed, right? But the price has dropped, you know, fucking 70%, which is fun in its own right. Because, you know, the price drop that it has sustained didn't provide any liquidity, which means that it was largely just shorting on the news. So that could recover, and if it does before the actual offer is made or the offer is denied, you know, that's a 200% increase from current prices, which is whew, kind of fun. What's up, ornate pigeon? How you doing, man? All right, so let's stop fucking around because I got about 30 minutes before JFresh and Dork hop in. So I'm gonna run through some memes real quick, really quick, and then we'll get on to the Mag 7, which is obviously more important right now. GME still kind of looks like garbage. I don't see any reason for improvement here. XRT is not on reg show. It's just options chain's fucking deader than a doornail. I think the options like total delta is the lowest it's been since like post split. Maybe it was a little lower in like Feb, but the delta's just garbage. There's been a reduction in the amount of short vol on it, so it may have a little range if that keeps falling off. Um, but I think most of that's due to the expiration and less of it due to short vol actually backing down. Let me see something. Um, yeah, pretty big spike in short puts on Friday. Um, Gamma's slightly positive at the end of the week after the expiration. So it might have like a little bit of upside Monday, Tuesday, just from short calls falling off. But I wouldn't say any higher than like 1160, 1170. And there's like no fucking delta on the total delta exposure on the chain is $82 million, which is fucking awful. Um, I think the only time it was lower, maybe it's never been this low. Maybe like around Jan 19, it got kind of no, still 20 million more than we have now. Yeah, this is fucking awful. Yeah, this is the lowest the delta's ever been on the whole chain. And calls are still like bot calls are falling off at a pretty rapid pace. So not a lot of positive pressure either. All right. Moving on from GME because that's just depressing. Uh Upstart starting to get pretty illiquid. I'd say this still has range down to the $20 level. After a 20 test, I think there's probably enough interest to buy it at 20 that it could see a slight recovery at that point. Um, they're really running out of liquidity, and if Nvidia has any kind of significant reversal after its most recent massive drop, that's going to push a lot of buy to cover in bots, which has been shorted hard right now. So I would keep an eye out on Nvidia while watching this. However, Delta, same like GME, very low. Gamma just barely positive, but not a lot of it on the chain. Um, Short puts have been falling off, getting replaced by long puts at the money, especially the $20 strike, and that put interest is kind of exploding. Generally, that's kind of bullish. So I would say my near term target there would be around like 1996, $20 for a bounce. Or like short puts at 19 with like 30-45 DTE. Fubo, I mean, still holding 34 cents. Getting pretty illiquid. That might be starting to reverse. That's usually pretty bullish if that happens. I mean, there's nothing really to derive from the options chain. It's got like two strikes, right? So nothing interesting there. Three strikes, but still relatively stable against the huge amount of shorting that's been going on, and also Russell hasn't been doing too well, which isn't helping things out here. Beyond still kind of cratering. It might be finding a bit of a bottom here around the 625 level. It does have range down one more dollar to around like 530. So this could technically fall off a little bit more, but pretty soon we should see this slip back onto reg show if the current pace of shorting continues, or there's a reversal in IWM. GoEV is one that I've been watching. It's like 23 days on reg show now, I think. Let me double check that because I didn't check over the weekend or on Friday. Let me just make sure that it's still on there. Yeah, it is. So yeah, GoEV is still on reg show. Hasn't mean reverted after the initial run, which put like the $2, 250, and definitely increased the delta on the $3 strikes. It's still about 34% up from its low. I would say that some covering probably needs to be done here. They're running out of ETF liquidity. They're running out of liquidity in the underlying. We should be seeing borrow costs, even retail borrow costs, rising slightly. Um, all of this in an effort largely to keep the covering from running away. So it got shorted really hard into the end of the week, and falling indexes helped that out. But you can kind of see here as liquidity in the underlying starts to improve, that generally comes, and liquidity there in the secondary markets, that generally comes with a pretty large move to the upside. This was included in reg show after a reverse split, so there's a slim possibility, but there is one that some amount of shares in excess of the existing float are sold short synthetically, which gives us quite a lot of upside range should any of that be covered. Huge risk, obviously. Indexes are selling off. If indexes are downtrending, that's like a constant feed of liquidity and can really dampen a lot of these runs. These plays tend to be much better on a trending market to the upside. And so there's a lot of risk that doesn't happen. But if markets were to turn around this week, maybe Tuesday or so before PCE, or have a slight recovery, that could apply quite a bit of pressure to this situation. Can gold run before a market crash? Gold can keep running all the way through a market crash. Nope, I don't pay attention to DJT at all. It's a big scam. They have a massive shelf offer. If it runs, you're going to get rug pulled by everyone in it. All right. I guess we could start with Apple. Apple's continuing its kind of slow grind down. Although I will say that picked up a little bit of pace this week. We're still holding above the 160 level. Actually, we're still at the 165 level, which is fairly supportive. Remember, this is the passive investment baby, right? So it's always going to have those positive flows that kind of stabilize a lot of downside moves if they aren't rapid, right? So most rapid downside moves happen on Apple after big news or bad earnings. And then the rest of the time, the downside is fairly stabilized by just the sheer amount of buying that's always going on in the underlying. It's one of the reasons Apple falls really slowly, but it's also a reason that it's really great for selling like bear call spreads against, because you have that constant push down, but it's stabilized, and really those positions benefit most from flat to slightly down, which is kind of the price action you get here. I will say that total delta on Apple is starting to reach its lowest levels since like 2022, and that's staying pretty consistent. Gamma on its wishing and washing between positive and negative, but I would say after Friday's expiration, Gamma's still positive, with Gamma neutral at 160 now. Charm's pretty flat, so not a lot of big moves should be expected on Monday, and call interest is continuing to fall off. This might just stabilize here around 165, 160. There's quite a lot of support at both of these levels. And probably until earnings. And then remember that there'll be speculation broadly on a lot of tech going into earnings, which could improve the situation on their kind of derelict options chains, or at least as they currently stand. AMD, I think I'm still about $10 for my long-term short price target. I don't see any reason I can't get there. It's well below delta neutral, below Vega neutral. Delta's falling off. Short puts that had accumulated um, throughout most of the run and on most of this downside are kind of getting squeezed out. Bot call interest has fallen negative. Long put interest is picking up. This doesn't look good. And I would look to like the technical levels, because those are probably most important. 143 is the next real support on this, and then the one after that's down at like 133. Beyond that, it could fall back to like 115, which is the level, or nearer the level at which it traded through most of 2023 before the most recent big surge. And AMD's been pretty consistent in reducing their guidance. I don't feel too bad being short it, but it still presents a little bit of that AI risk. Amazon, I think it's just failed trend on Friday. This might actually have some room down. It's been consistently bullish across the last several weeks, months even. And most of the options positioning just indicated a slow grind up. Gamma's still positive on this. It hasn't slipped gamma neutral yet. and it wouldn't until a failure of like 150. So it's still quite a ways away from that. And delta neutral is at 148. So this is still in a very positive environment. Any bounces on it could be opportunities to play the upside since the is so supportive, but call interest has been falling off on it very quickly, and those market maker neutral levels are probably going to move a lot closer to spot. They've been extremely stable since February, as at their last earnings, and so they're just starting to break down now, and we may see those move closer to spot and things get a lot more bearish. But right now it's still fairly well stabilized. There's always opportunities for selling credit spreads slash CSPs. I don't know why people. I mean, I just highlighted Apple. Anyway, all right. Later, Gen. Google. So this is one of the most recent ones to run really hard, and I'll be honest, it really hasn't. It really, like, much like Amazon, has not seen a significant portion of what its potential breakdown could be. Remember, all of these tech stocks are still massively overvalued. They are by no means cheap on this current correction at all. Um, they're still trading at many multiples of their price to earnings. They're trading well above their long run average. They're trading well above their long run sector average. Like, they are not, just because they've dropped, even Nvidia down, 20% or whatever, is still very expensive. So these all have like a lot more room to fall, and some, like Google, have barely fallen at all, right? And Google still looks pretty stable, honestly. Delta here is still positive. It is starting to break down, but very slowly. Positive charm fell off last week to the tune of about $107 million on this chain, probably a little bit more tacked onto that on the Goog L chain. Call positioning broke down slightly, but not very much, and it's still in a supportive environment as far as the is concerned. Um, for things to get really bearish on this, it needs to break below 146, which is still $10 out of the money. So there's an opportunity for like a long-term short play here as that positioning breaks down, but I would say that it's not broken down enough to truly confirm any bearishness. And an entry around 146 to the short side would be significantly safer than one at this level. Although you could hedge an entry at this level, and then add to your short position as it fell. Obviously, the current trend is down. That could continue, and if that does persist, this will become significantly more bearish as it moves closer and closer to that 146 level, especially under the psychological level at 150, where so many people went long, right? So that one may be longer term bearish, 30 to 90 days. As far as call selling opportunities, maybe out of the money, but risky with the positive gamma, because it can revert back to like the upper trend really quickly. If we were closer to gamma neutral on it, I would say that maybe there was some call selling opportunity, but not right now. Uh, Meta finally broke down an actual decent amount, and this hasn't happened in a while. Meta's been very stable. It's had a huge number of in the money calls, which have been falling off pretty steadily since like Feb 9th. And they turned more substantially negative this week. But Meta's price isn't super influenced by its options chain. I would say below 47 474.57, so about $6 lower. We could start to see a more significant sell off. The would be selling the flat tape there. Delta is breaking down, also very slow. Gamma's breaking down and isn't very supportive, but it's still positive. Um, However, I mean, even Friday, people were still selling puts on this, so there's still kind of a buy the dip mentality there. And if that takes over on any kind of even just a capitulate, like a bear rally, right? Like just shorts taking some profits, so we get like one day 120 150 basis point upside. This could move up really hard, and that's true for the rest of the mag 7 that have kind of are still in that supportive positive gamma environment, like Google, like Amazon. On any kind of market reversal, they can move to the upside really fast. And so we could get one of those days where we see like Meta, Google, Amazon all up like 3-4% in a single day. And so you want to be really careful entering anything short here, on all of those, just because of that potential effect, right? And you want to have, if you are going short, you want to have some kind of floating upside hedge, just to at least cover premium costs on any sharp reversal that you didn't expect. I generally don't cover cat as part of the mag 7, but I might have some thoughts on cat with earnings coming up this Friday. But I'll write more about cat and pickles picks if I think it's worthwhile. Any chance of a BA recovery, or is it done for a long while? I mean, Boeing's fucked. I mean, they're deep in a middle of a PR and legal shitstorm that is probably going to persist for several years because none of that kind of stuff resolves quickly. It could stay volatile because volatility on it is quite high, but as far as like a full recovery, I highly fucking doubt it. At least anytime soon. It's gonna take probably several years to get through all of the violations. Um, and then they're going to deal with lawsuits, right? On the back of that, as more and more evidence comes to light of malfeasance, they're going to get hit harder and harder, probably with large class action lawsuits, right? You can look to companies like 3M for evidence of what that can do to your stock price over a long period of time. As the market prices in those potential losses against your future earnings. We also don't look like we're going to be moving into an environment where capex is expansive, or we're going to get a lot of durables demand on the corporate side, and those are the two big drivers of growth for Boeing. Because they want those airlines out there buying new planes consistently, and that's just not going to happen when all the planes that everyone just bought are fucked. Long Airbus, that could be a play, although I don't think so. I mean, it's not. I will say this: Boeing's very unlikely. Boeing's going to go out of business or anything like that. Um, there are companies, a few of them, and I mentioned this several weeks ago, but I'll bring it up again. There are companies that are responsible for handling the refurbishment of those planes and bringing them back up to code and handling the modifications and doing the appropriate repairs to get those fleets back into a condition where the FAA is like, these are serviceable and these can be used, right? And those companies will benefit greatly from from all of this, right? Because those airlines don't want the downtime on large percentages of their fleets, right? And the government will be incentivized to also subsidize getting those fleets back up and running as quickly as possible. And so the companies responsible for those modifications and those repairs, They're going to probably do quite well. So, on the backside of every tragedy, there's money to be made if you know where to look. Microsoft, I mean, it's falling. It fell below 400 again, much like Meta, even less influenced by its options chain than Meta is. Um, this is just starting to approach delta neutral, and as of Friday, the dealer is now short the flat tape, which means every tick the dealer is selling. I'm not going to get into the details of all of that, but basically the market maker is a net seller in all situations. So on an uptick, market maker is a net seller. Downtick, market maker is a net seller. Flat, market maker is selling, right? And so this creates a constant downward pressure that is inverse the constant upward pressure that we normally see from passive investment flows, which is very bearish, obviously. Call delta on Microsoft actually recovered into the end of the week, so there are dip buyers here, probably in anticipation of their upcoming earnings. Delta neutral is at 386. I would look to delta or gamma neutral 397 for stability or a reversal. And then if it fails those levels, that might be a good short term bearish position. Let's see. Netflix just dumped. My thesis on this going into last week and why I wanted to short earnings, which I know is extremely unusual for me, wasn't entirely about earnings, right? And I'm not saying this to defend the fact. I very much knew that I was shorting earnings, but um, I had different reasons for shorting earnings than its earnings potential. My thoughts on Netflix were if they were able to beat expectations, there was no way that they could raise guidance to meet future expectations at that same level. And if they were to miss, they were vastly overpriced. They were price was sitting right on top of gamma neutral. The market had priced in a pretty significant amount of bearishness already. Participants were obviously more invested in the downside of Netflix. And this was pretty obvious at the beginning of last week, long before earnings printed. And so, and we got kind of the result I expected, which was that Netflix beat, but their guidance did not match their current projections, and people took the opportunity to sell the top. Netflix was down 9% as of Friday. It's now fallen below gamma neutral. I think it's just below delta neutral. No, not quite. Delta neutral's at 540. If it loses the delta neutral, it could just keep falling. Slow grind down, as low as the 300 range over time. So, well, I'll be watching it really closely, but that it worked out really well. I was kind of happy about it. As most of you know, Friday, Nvidia failed gamma neutral test at 838. Um, this brought on quite a lot of selling because the range below 838 was not very supportive, and the majority of the gamma on the chain for Friday was short, and this was exacerbated by very cheap zero DTE puts. Which were out of the money. Delta neutral is still quite a long way off, at 699 or 700. It is falling in line with the falling price, so there are dip buyers coming in that are excited for the discount on Nvidia, although they may get burned up. Right, and that's something that we've talked about in the past. There comes a point as something's falling where the demand for liquidity is so high that buyers actually feed the bears, right? So, if and an easy way to understand this is like price is falling and everyone goes long here, right? everyone's like, woo, we found a bottom, shit's great, let's reverse back up. Except price doesn't do that, and it falls instead. And all of these longs almost immediately become sellers, right? And in this way, they actually end up feeding a larger downside drop than what would have occurred had they not gone long here and had a more neutral take, right? So that's, I mean, something to watch out for, something to think about as far as market psychology goes, and it does have a mechanical effect as far as the options chain and the market maker is concerned. I want to pull up Nvidia's chart though, because I want to look at where I gotta pull something up. So give me a minute here, because I want to look at where we have support on this. It may not have much. And you know, the 700 level is right around here. You know, historic support at 645. So there's a shitload of range to the downside. It just takes a minute for this to load because I gotta parse the whole chain. So give me a second. God, I hate this. Can I just use ours? Ours is better. Is it up to date? Hold on. Ooh. Well, son of a bitch. Okay, so support to the downside 750, 720. Oh, this is old. Never mind. Wait, no, that's nope, that's up to date. 750, 720, and 700. Yeah, I would say 750 looks pretty supportive here. Both in bot call interest and what appears to be an ever increasing number of short puts. So I would look for resistance at the 750 755 level. A call wall was erected at 775. That's probably where at least the initial step of any kind of bounce would return to. So this, let me see here. This looks like it's got about $12 of range to the downside, and it's got about $16 of range to the upside from spot. So it's possible on a test of that 750 level that it bounces back to 775. That's where I would look for a recovery. I don't know if those positions are going to be strong enough to support it. If it loses 750, it looks like it's going straight to 700. There's almost nothing in the way there. So that's the level I would be watching going into tomorrow. That seems pretty important. And then Tesla. Tesla, wow, it's so bad. And I feel like I haven't said it enough. It's really, really bad. They're a shit company. I've been pretty bearish on it for the last year and a half. And, you know, after the initial surge, that's obviously been the correct play the entire fucking time, right? It's just gone down ever since it peaked back in like July of 23. Um, there is, that's not accurate. Hold on. Well, that can't be right. Nope, it's not. So there is some call side support at 45.40. None of it's that supportive, and bears are pretty well positioned for a move all the way down to like 35 or 30. To be honest, I think we've fallen below 50. The majority of the short interest is now in the money, and so let me take a look at one other thing here. Yeah, Tesla's getting really close to failing. So if it fails the 126 level, I'm not sure that there's much to stop it from continuing to drop. Volatility would start to pick up on it pretty significantly to the downside. Call interest is just eviscerated here. There's very little gamma on the chain, very little delta. The gamma that is on the chain is negative. So I'd say it's got about 7 to $12 of additional downside here before it finds some stability. But then if short positions continue to pile in, especially post earnings, it could fall really far. I mean, there's definitely a point there on a break of like 126 where there's nothing to stop the continued downside, and it could just bleed out in perpetuity. So yeah, I mean, a little bit of downside room still here on the chain. Not a lot of recovery into earnings. So, I mean, there's a contrarian view that since so many people are positioned short, if earnings is positive, the move to the upside would be very, very outsized. But it looks bad, and it looks like everyone thinks it's going to be bad. And if they're right, then it's going to continue to bleed very, very hard. 20. I mean, if it broke through 126, I don't know where it could go. Just down at that point. Like there's no bottom anymore. After that, right? That's just selling off. Like the stock itself is just crashing. It's not GME. You're right. It's actually worse. Which is embarrassing, right? It's worth $20 a share. I don't know, maybe like 40, 50. Post split, that'd be like, or pre split, that would have been like 150. 80's too much. All right. I think that about wraps up the Mag 7, and I'm a little late to meet with the quant. So if you guys need to review that later, the VOD will be up after this is all over. What's up, nerds?
So anyway, when I put it in my butt,
Gotta find my
I put it in my
headphones. Hold
butt,
on.
and then the rash actually started getting smaller, but then it got bigger again. So I took it back out of my butt, and then the rash went away. So I don't know if they're correlated.
Did you get all that?
No, not really. Anyway, what's up?
What's up, Greg?
Nothing much.
We were just talking about Robinhood shutting off trading on Thursday night. Was it?
Did they? They shut down the overnight fake markets.
Yeah.
Yeah. And then the market magically went back to spot the next day.
Yeah, we decided it was because Kenny got pissed and told Vlad to shut it down. Because yeah, like just for the audience, the overnight session, like that Robinhood allows where you can just trade shit 24/7. when there's no open exchanges, they have to clear everything internally, and all that shit has to get netted out as soon as the exchange opens, or at some point when the exchange opens. So when everybody's just selling their stock like that, what's happening is either Robinhood or Citadel, most likely Citadel, is just the counterparty to that trade, and so they're just buying up everybody's bags essentially, and then if the price keeps going down, their bags get heavier and heavier. And so at some point they were like sitting on some losses, and they were like, "Glad shut down. We'll take care of this tomorrow morning." And then they
can hedge with futures though on the index at least.
They can, but and that's why futures were tanking, But you can't really hedge if it's like individual tech stocks. I mean, to get that to be equivalent to a future contract is weird and difficult.
Yeah. I'm pretty sure it's just a big synthetic bid ask, and they just rob everybody overnight.
Oh yeah,
it's.
Oh yeah.
I can't imagine participating in that market profitably.
No, you
could.
Yeah,
I would.
But
yeah, like I don't have a. I don't have a Robinhood account, so I don't check those markets, but I've seen some people post stuff like of the overnight session, and you'll see like big names, big single stock names going up like $20 overnight, and then you wake up the next day and it's like just back where it was. So someone's just buying it super expensive.
Yeah.
Well, yeah, they're pumping it and dumping it in the illiquid session, right?
Yeah.
Like if you just threw like $50 million in a Robinhood account, you could.
I mean, it's just it's an entire market operating off of one participant's book. It's literally just robbery, right? Like you just wait till everyone's net short and then you pump it. And you wait till everyone's net long and you dump it. And it's all within your own like containerized market. So you fucking do whatever you want. I can't believe that there's real great people that trade that.
I can't believe that there's an SEC that allows that to happen. I mean, it's basically like an unregulated crypto exchange.
Except for regulated equities, right?
Yeah. But the trading
regulated. The trading is regulated.
I mean, yeah, you just get robbed on the spread, so you make no money on the upside. And then when everyone's net long, they dump it. And then you get robbed on the spread, so you make no money on the downside. And when everyone's net short, they pump it. And then they make a bunch of money every night, and everyone else loses a bunch. It's like the world's most rigged casino. It's like going to a casino in Henderson.
They should just allow 24/7 options trading as well. Why not?
Or playing like a table with like $1 no limit blackjack. but they use like 6 3/4 of a deck.
I think there's a lot to be said about that. I mean, there's no reason I think to have distinct contracts. They should just have continuously variable strikes and contract expirations.
Well, CFDs are illegal in the US.
Yeah, can I just set my own contract expiration and strike price and everything? How about that?
Yeah.
I want to buy a Nvidia 42069 put.
Yeah.
I mean, that's what swaps are, right, Derek?
I guess that's true, huh?
Basically, yeah.
Just write an agreement for the option that you want, whether it exists or not.
Yeah, I mean, you could theoretically create a synthetic long at whatever strike price you want with enough money. But yeah, could we just take a second, Gherk, to appreciate the SPX monthly candle that's currently forming?
Oh yeah, absolutely.
I just want to impress upon everybody how bearish this candle is.
It gets a lot more bearish under 48.53.
Like, look at that thing.
The really important levels here. The really important levels here. We're all actually like, we got hung up at every one of them, and we broke them all very cleanly. And that was like 511, 50.56, and then 5,000, right? And then the next actual resistance is at 485 or
Yeah,
48.53.
I can't believe that we broke 5,000 so soon. There's so many contracts there. It's crazy.
If we break 48.53, this is a full reversal of the November trend. This is where it all goes to shit, because that opens up that downside test at like 4,400, 4,450. Well, I guess it's like 44.48, which
Yeah,
is
things aren't looking great.
violently ugly. Yeah, nothing looks good. I mean,
So everybody's
I want to
expecting a
say
violent
positive
bounce.
things because, yeah, well, everyone expects a bounce, but that's also the exact scenario where everyone gets fucked, right?
Yeah, I mean
Like,
they've been buying the dip all the way down.
yep, yep, and it hasn't done anything. They've not been able to get vol under. This is a very different. I think we should discuss that actually. This is very different from the August, September, October breakdown of last year. In August, they actually were able to stabilize the downside. We bounced into the early part of September. They weren't able to gain any more meaningful upside, so we fell again. And then we bounced again in October when they stabilized. They haven't stabilized any of this. We're down 5%, which is greater on the monthly, which is greater than any of the 3 months, even the low, I think. I think even the low in August wasn't a full 5%. It was close.
Yeah, it's
It was about
accelerating quite.
it was almost 5%.
What's crazy though is that they're still selling puts into this.
I was about to say they're
So,
not really buying the dip; they're fading the top, right?
well, the people who are long, who are still buying the dip, I mean, I think there's more people who are long who are just taking profit, trying to take profits.
Yeah,
Um,
yeah. All of
but
our
the people
upside
who,
bounces are met with big sell-offs, which is very obvious, like profit-taking behavior, right? De-risking
yeah,
profit-taking.
so the people that are still trying to take profits, there's just like not enough of them to matter. um, what's really interesting is that people are trying to conflate some of these moves. A lot of the theses for like why it should bounce have centered around geopolitical risk. So like, oh, Iran hit Israel with a bunch of missiles, so everybody bought insurance. So when that clears up, everyone's going to sell it, and we're going to bounce. But this is all.
I don't
I
think
don't
any
think
of
that
this
that's
has to do.
really.
I don't think there's even like risk
Yeah,
premium parked anywhere.
yeah, I agree. I think that it's just a narrative that's following the price. I think that this is just the fact that everybody juiced the hell out of the market all the way up to 52.50, and now people are trying to get out.
Yeah,
uh, and all of the sold puts are getting dumped onto, and the sold puts are fighting it, but they just keep getting dumped on. What's crazy to me is that volatility was higher. Volatility reached a higher point last Friday than it closed this Friday. So volatility was actually flat for the entire week, if not a little down,
yeah.
which is insane to
It
me.
was, well, VIX futures were up 4% this week at close. But I mean, if you really look at that, it's still very flat, right? And that the correlation between them only moved like 6% more positive, which is a bigger move. But I mean, for how much we dropped, that's nuts.
Oh yeah. So they're fighting it, and I don't know at what point they run out of ammunition. They seem to have a lot, which makes me think it's got to be banks or just some very large people who are
Banks
doing
and
the
giant
bulk of
private equity
this.
funds.
Well, it's banks who are
Um,
invested in giant private equity funds.
yeah. But yeah, I mean, every day we go lower, they get more and more screwed. So either they're going to get their massive bounce that they want, or they're just going to get buried underneath the weight of the market.
Here's the thing I think is very possible and something we should consider is that they get the bounce they want, it fails, and we go way the fuck down because they're gonna leverage that up so hard. But I mean, let's be honest, if we don't get back above 5150 in short order, right, which is, Jesus Christ, almost 4% out of the money now, we're gonna go down. We're, like, that failure is gonna be
Correction,
epic.
4% in the money.
All right. Yeah, it is. But we're gonna have to, like, we're gonna, like, if that bounce fails and everyone levers it up, like, that's kind of what I was talking about just before you guys hopped on, is that, all of those buyers are gonna end up providing liquidity for the downside move. Anybody who comes in on that bounce in large size, right, is going to get burned if that bounce fails.
I just don't know who's going to be actually capable of coming in large size.
Yeah, I agree. Leverage ratios are terrible right now, and the ability to leverage things is not getting any better. I mean, the 10 years stayed stably above 4.6 like all week, right? Dollar's still way the fuck up. They've they've pushed the goddamn carry trade so fucking hard. I think we're only like 50 points from like the October like leverage high on JPY, and all of that's going towards short vol, right? Like, the correlation between like the forward return on volatility and the leverage in the carry trade is like, I mean, I would actually love Dork to pop that into Pine Script, because I think it's got to be close to like 1 to 1.
Between what? Oh, the volatility hedge. Oh yeah, well of course. I mean, when you think about the mechanics of and this is less to do with so the carry trade, it's a lot of things, right? It's a very ubiquitous mechanical tool. But when you think about what the carry trade facilitates, it's lending, right?
Yeah. Well,
And when we talk
leverage
about
too.
margin, when we talk about margin, right, and leveraged products, right, those are lending mechanics,
Yeah.
right? So when you borrow a shit ton of money from somebody, right, what do they go and do? They go and collateralize their treasuries if they have enough to do it. Otherwise, they collateralize. They have to buy treasuries to collateralize them. And those treasuries they buy are hedged for interest rate risk, right? And also for market activities. So the whole idea is that when they collateralize their bond, they want to make sure that if it goes up in value, they're hedged for that. And usually that happens when volatility goes up, so they hedge with volatility. But if it looks like their bond values are going to go down, right, you'll see the forward return on volatility convexity go negative, because they're assuming that vol is going to go down, the price of their contract is going to go down, they want to stay neutral. At least in terms of their interest rate spread.
So I want to kind of go a little more into the micro on that and try to give people an idea of sort of what that means. If you're long bonds, right, as the value of your bond drops, which is what's happening here as we see the 10-year 2-year, right, decline, and the convexity of volatility returns increases, you need to increase the amount of leverage in the carry trade relative to the decline in value of your bonds. And this way you can keep your margin stable. And I understand that even that explanation is very complex, but I don't know if I could simplify it much more than that.
Well,
Um,
it's not just your margin, right? This is also your counterparty's dollar collateral that needs to
yeah,
be kept
yeah.
equal, and that's why the carry trade gets levered into so hard, and why we see USD JPY in the face of all this, right? We saw it when Israel did the thing. We saw the carry trade sort of pop off, right, with a little bit of de-risking, at least on the forex side. But after that, right, we saw USD JPY fully drop back down to its, or USD JPY fully rise back to its near its all-time highs, right?
Actually,
Um,
you know
yeah,
something else that this chart shows us in line with what you're saying. If the yields on bonds were to fall below zero, I don't even think theoretically. I think, yeah, so I think if the forward yield on volatility continues to rise and we see the 10-year, 2-year continue to kind of collapse, as far as the positive yield on that goes, right? That below 0%, if that green line right there, let's be really specific, if that green line goes below 0%, then the net dollar collateral is negative, which is like, that would be the equivalent of a market wide margin. Sure, that would be a margin wide, market wide margin call.
yeah,
Fun. 2 p.m.
yeah, it's incredibly dangerous. There's a huge risk that goes there, because that's like, this is also, it's not just, it's everything, right? It's so ubiquitous that it is literally everything.
It's the spread
Um,
between yields, Big Dilly style.
yeah, this is mortgage rates. This is, margin requirements. This is, cost to borrow. This is everything, right? And so when we talk about something like this, it is like a giant lockup on liquidity for everything. Everything that has to do with lending, or borrowing money. It all sort of freezes up because nobody can determine how much collateral somebody has, like, in
So,
the value of that collateral.
JFresh, what's the current leverage ratio on puts?
It's like around 14 to 15. It's still kind
Okay.
of like up at the.
So if that
It
green
dropped up.
line
It
goes
dropped off a
below
little bit.
zero, total options market put leverage would go from 14x to negative, like that.
Yeah. So that's what's like so insidious about this drop is that like even just this OPEX with everything that rolled off on Friday, it was like all calls, all of it. It was like 300 and something billion, and call delta fell off, and like 60 billion in put. It was like nothing. I had to zoom in to even see it.
Well, put delta is just rocketing, right? Because we're going down.
Right. Yeah,
Yeah.
because we have this massive amount of leverage that nobody's delevering, and we're just falling right into it. And
At some
so
point, we
even
should probably take a look at the numerical value for contracts falling off, also, because I feel like that specific change, like the change in delta or the delta of delta, is is telling us more about the trend than it is like the options that are coming, like
so you're
actually
saying
coming off the trade.
just looking at OI?
Well, yeah, if we could, like, well, maybe a more comparative analysis between the decline in delta and like as it pertains to the decline in OI, so we can see
Yeah, there's no
where
decline in
positions are
OI.
actually closing, right?
Yeah,
Versus just
there's
where the delta's increasing, which because
yeah, we could
yeah,
look at
that's
that, but there's no meaningful decline in OI. I actually have I looked at the numbers for the SPX and the SPXW chain. We're still, I mean, we're like let's see. calls are actually still a little elevated. Puts are still elevated as well relative to say like 2022.
Because I mean, if we make the assumption that everything's just like sold, right? Like if all the calls are sold and all the puts are sold, which is probably fairly true most of the time.
Yeah, there's I mean, if you just compare it, so the thing that I try to look at to give myself a sense of like what the scope of it possibly is.
Mm-hmm.
So like for example, the SPX monthly contracts in 2022 averaged around 7 million contracts on the chain.
Mm-hmm.
And then, by July 2023, they started ramping up in Jan, and by July 2023 till now, it's been pretty flat around 9 to 10 million contracts. So if you think back to like 2022 and say, okay, maybe like 30 to 40% of the puts were sold. I mean, this puts us over. I mean, even a reasonable estimate would put us over 50% sold, which I mean corroborates all of the other activity we've seen going forward. So I mean, it's obviously it's a massively sold system. And if you look at SPXW, it's the same way. I think it's something like 700,000 contracts above long running average. Those are probably all sold too.
So here's something I want to bring up that I think is really interesting. So we talk about Volmageddon, right? We're like, yeah, short VIX products were definitely being used in mass in Volmageddon, and that's why the market tanked, right? But nowadays, one thing that's been being used all the way up has been options income ETFs, which sell covered calls, right? And we know just by watching the market that those covered calls have just been getting squeezed and squeezed and squeezed, right? And I think that those income ETFs don't care because as long as the market goes up, their position is good, right? Because they end up with a long position that
Yeah.
they can end up selling for a gain, right? But if they're sitting on these long positions, which I bet they are, the moment the market reverses, even though they have all these covered calls out, if the long position they have, in terms of exposure is larger than the covered calls, they're going to be sitting on some serious losses, or they're going to participate and amplify any downside moves if they try to cover their upside, right?
Yeah.
So and that market is gigantic right now. Like it is huge. It's something like I think it's like $80 billion of money in those ETFs. So, and I mean, that's it doesn't seem like a lot when we think $80 billion, but that's in terms of like net long positioning, that's a lot.
God, this is so
So
much worse than like the GFC.
it's crazy because it's not like so GFC, right? Things were looking like good, like and everything was really looking kind of normal,
I
right? Up
mean,
and like besides the lending practices, things were looking pretty normal. Right now, the market is just crazy overvalued. At the same time that things are looking kind of normal, right?
yeah.
That's the big difference is that just the multiples we're at are insane, right? And there's not like dangerous mortgage lending practices going on, like no ninja loans or anything. They kind of put the kibosh on that, but there's still
No,
the
they
underlying
didn't.
issue. There's still the issue of the that most of the dollar collateral in the system is shit, right? Because you can take a junk bond and get a collateral swap with the treasury, and now your junk bond is as good as a treasury when it comes to dollar collateral, right?
Yeah.
That's still a huge part of the system, and that's the part that's gonna like be the systemic risk is when all these junk bonds on CRE and maybe to some degree RRE are just gonna tank, and it's gonna be awful, and that's probably what's gonna start the major unwinding of the carry trade. Is
Yeah,
once all
let's
this
not
dollar
forget
goes to shit.
I think like yes, predatory lending practices on the retail side have declined, right? But and hear me out here. What about, Todd McNamara's private REIT that has $1 billion in collateralized obligations for their fucking 30 Airbnb properties?
Okay, yeah. So there's okay. You're right. There is, and I mean,
Like,
private
multifamily
equity
is a
firms.
huge fucking risk here.
Yeah, and private equity firms definitely are holding a massive bag when it comes to these loan obligations. But ultimately, even for them, right, the leverage they're using to get these things is still shitty dollar collateral, right? It's just
Well,
shit
the
dollar
leverage
collateral.
they're using to get these things is equity. It's real estate equity valuations, right?
Yeah, shitty dollar
So, yeah,
collateral,
well,
like I
yeah.
said.
I mean, but more specifically, like, honestly,
Yeah.
having a big pile of dollars would be better.
It would. I mean, well, nobody really has a big pile of dollars, and a lot of management firms, I'm sure, have a diversified portfolio of everything from A to Z in terms of bond quality. And so, but they're just taking it all and they're just doing collateral swaps on that shit to get treasury quality dollar collateral. And then but the thing is, the person who they're getting the swap with is also using a collateral swap to collateralize their shitty stuff. And it's just a giant fucking circle jerk of terrible collateral being set to the quality of a treasury. That's the part that's the systemic risk, right? And these guys, like, what'll happen is, even though they're using maybe something else as a piece of collateral, right? Those loan obligations they're creating by buying these properties on leverage with their equity, that collateral is going to go to shit. They're going to default on that stuff, and what's going to happen is the chain of collateral swaps, right, starts to fall apart from the source,
Mm-hmm.
and it goes through this round robin process where it finally reaches the person who's the original treasury holder that has those collateral swaps out, right, as the primary counterparty. And it's just the unwind of this is just it's monstrous, it's convoluted, it's unbelievably opaque, and the only way you notice it happening is when you start seeing disorder in the market. You start seeing market makers, right, who are a huge consumer of liquidity. You start to see their bid ask spreads fall apart, right? You see the bid fall out from under a certain stock or the market. Especially liquid stocks like SPY, you'll see the spreads on it just explode, and that's a big sign that there is major dysfunction in the collateral debt market.
Yeah.
So that's basically what I'm looking for at this point. I mean, now that we've gone down a bunch, if the short volatility actually poses a systemic risk, we should see that happen as VIX pushes up to like the 25 mark, 30 mark.
Mm-hmm.
We'll start seeing the bid-ask spreads really get unusually wide on options and stocks, like liquid stocks like SPY.
Yeah.
And that's a big sign that there's some major problems going on. It doesn't necessarily mean down, right? But it does mean major liquidity, and that's it's a big giant warning bell. And by that point, things are probably already going to shit in the stock market and the bond market. Like, you'll probably see yields
If the
start to
Fed if the
rise.
Fed doesn't cut rates here,
Yeah, they need to cut rates.
if the Fed doesn't cut rates here, Dixie's going to like 150.
Like, they really do need to cut rates.
I don't think
Like,
they can.
well, if they cut rates, they collapse the spread themselves, right? And they'd much rather not be responsible. It's the whole culpability thing, right? The prisoner's dilemma.
There's only going to be two currencies. It's going to be dollar and gold.
Handguns.
Mm.
And Bitcoin.
Ooh, no, Bitcoin might collapse actually.
Yeah,
Bitcoin would go straight to
that's
zero.
kind of
Yeah,
fun.
I don't think
Actually,
anybody's buying fucking Bitcoin with the dollar at 150.
let's see what the mempool's showing right now. Well, they're getting their costs under control again. The nice thing about this new epic, or whatever they call it, the split or the halvening,
Happening.
is they use that block to introduce runes, which is basically a way for people to mint Bitcoins on Bitcoin, just like they do with ERC20 tokens or whatever.
Oh, perfect.
Yeah. So
So
now
we
you
should
can
start some
get
coins.
dog whiff hat with boobies coin on Bitcoin.
Fuck yeah.
Oh my god. We're so fucked.
Three currencies, dollar, gold, and blowjobs. All right, fair, fine. Three currencies.
Yeah,
But it's
sex
still
work will never
interesting.
not be a lucrative business, right?
I'll
It
buy
doesn't matter
pickle
what.
coin. Okay, me, Dork, and JFresh are gonna hold 90% of the float, and
One,
then
I'm just gonna dump it on your heads. We're not even.
we're calling it brine coin.
Can we just call it pump and dump coin?
It's not
I think
even
that's already a
decided.
coin.
It's brine coin. It's what it's gonna be.
Ticker
Coin.
dill.
But no, so one fun thing from the halvening. I mean, everybody loves the halvening because it makes Bitcoin more rare, and so more people. I guess if it's more rare,
It just makes it
then
harder to mine.
right. I mean, the end result is it just makes it more expensive to mine. And so the only way that the miners can be compensated historically is just for the price to rocket. And since miners control most of the Bitcoin and there's plenty of greater fools, they can rocket the price. And they kind of did so here. I mean, I think the break even for Bitcoin was somewhere on the order of 35,000 a coin, because that's when at least one miner that was going bankrupt filed some papers to resolve the bankruptcy and get back above board at $35,000 a coin. So you double that, and you're at where we've been for the last couple months. And so miners are now, back to break even where they were at 35. And some miners are profitable here, and a lot of them are still not profitable. But at least this gives you like a rough estimate of where that line might lie in aggregate. So one of the fun things though is that, if they needed it, say a miner needed it to be at 70K before the halvening to stay afloat, they're getting most of the value from the block, from the rewards. It's I can't remember what the number is, but it is the vast majority. The transaction fees are almost negligible. However, you cut that reward in half, and the only way to stay whole is to jack those transaction fees up something like 25x. And what's interesting is that, it's hard to tell what's going on now with the cost of a transaction, just because there's a lot of hype and a lot of dynamic things. They just issued these shit coins on chain, so there's a lot of activity going on. But right now it costs about $12 to $20 for a Bitcoin transaction, where it used to cost around $1 to $2 before the halvening. So it'll be interesting to see. This has been going down over time, but it'll be interesting to see where this settles, and especially what happens if Bitcoin drops. What happens to those fees? Because if it starts costing $20 to $100 per Bitcoin transaction, that's going to dry up so much of the retail volume that's needed. And that's like the beginning of the end. Once you have lower volume, you have fewer blocks to mine, so the rates have to go up more, and then the market might just kill itself with fees. So
That's how
it'll be.
I fucking pwned some Bitcoin bull like a little while ago about the miners. Is that like any miner? So miners are only performative in the time frame that they come online, right? And then their performance over time literally looks like this, right? It's like halvening, and then halvening, and then halvening, right? Um, and so like guys like Mara and stuff, right? This will be their mining performance over the next like 12 years. It will always be in a decline, and they'll never make up the lost mining capability from each halvening, because at the point at which they begin to turn it around, it halves again, right? And so the only miners that can be successful are ones that start post halvening and begin mining there.
Interesting. Yeah, I don't really follow all those publicly traded mining companies
They all
because it's all
suck.
bullshit.
Yeah.
Yeah, I would just want to short them and I'd get squeezed.
No, not
It
short
wouldn't be.
MSTR because they just pile Bitcoin. I mean, if Bitcoin's going down, then MSTR is going to go down super fucking hard because it's just an arbitrage machine.
Yeah.
I mean, a long time ago we used to play MSTR a lot on like the Bitcoin cycles because it acts as like a leveraged Bitcoin ETF essentially.
All right, I'm trying to get you this data you asked for, which was the change in OI since the peak
Well,
for it.
compared to the change in delta or the delta of delta, right? I want to see like what part of the chain people are being forced to sell off from versus just options expiring, right? Like where are the long calls actually getting blown up?
I see. Yeah, I mean, I'll have to rerun this because this showing lower because a lot of stuff just fell off the chain from OPEX. But I guess I can just say it. So 4,900 fell off the most. 5,300 fell off pretty significantly. And then the rest have just been kind of meh. Like 5,250 was a lot, fell off. Well, some fell off. 4,670, some fell off. But for the most part, I mean, it's pretty flat. And if anything, from like from about, let's see, 4,600 down, they've just been adding,
Hmm.
which is where all your vol stuff is. So they've just been
Yeah.
selling a ton of vol and then trying to get some of their more in the money or close to the money stuff to fall off. But it's just such a small amount
So
that,
I actually pulled up the skew index because I think it's kind of good right now for people to visualize a bit of the positioning that shortfall is in. If you consider that like from like May through December, right? We saw our largest tail risk hedging, right? And then that broke apart into July, picked up into October, right? And then that broke apart from November through March and has just started to increase again. Um, so there is some tail risk hedging, but if you compare it to like October of 2023, we're in a far more precipitous place as far as like short vol blowing up is concerned, and like long tail risk or like tail event hedging is at a substantially lower level than it was in October, right? Or like skew was at like 128.40 in October, or at 133.40 now. And we actually reversed. Sorry, we reversed on Friday. That's so there. I mean, this kind of gives you an idea of like total short vol being sold or like short vol concentration. Because if there's more short vol, then skew would go up. If there's more long vol, skew would go down. So it's a pretty simple chart to look at, but we're very far from seeing any kind of significant amounts of tail risk hedging come online, which means there's still a lot of short vol exposure across the chain.
oh yeah, for sure.
And here's one you'll like actually. Here, let me pop this open because you'll love this chart. I'm gonna zoom in on it a bit. 'Cause this is kind of where things start to break down a little bit. Look at ES implied top of book liquidity as of Friday.
What could go wrong?
Well, I mean, we're arguably a little closer to a crash on the future side of things than we were in October of 2023.
Yeah, it's. I mean, a lot of things. The put delta on the chain is almost as big as that point as well. Even though we have so much more leverage and we have so much farther to go.
This is kind of a nice chart I found from Tier 1 Alpha. I have a similar chart of this somewhere, but it doesn't overlay SPX. But CTAs have sold off. Oh, it's like roughly 50 billion so far.
Nice.
Yeah.
Good for them.
Yeah. But quite a lot more that they could sell off if we continue to trend down. Is there anything else really cool? This might be something for people to look at and consider. This is sector returns based on dollar value. So strong dollar is blue. If the dollar is strong, that correlates with positive returns and to an extent, infotech, but consumer staples, healthcare, utilities, kind of flat performance. But this is only a 3-year look back. And then if dollar weakens really quickly, financials, consumer discretionary, communications will do really well. So just fun macro flow kind of thing for dollar value. But anyway, you guys didn't have any charts, so I felt like I had to keep up.
So, Gerg, I have a question.
Yeah.
So, we talk a lot about up, down, calls, puts,
Yeah.
options, all this stuff, right? For somebody who doesn't want to expose themselves more than 10% to options exposure to downside, right? For like a hedge, right? How does one position their equity portfolio for a volatility based pullback, right? Like a mechanical pullback rather than like a geopolitical or economic, cycle sort of pullback. I've been pondering this, right? Like when vol spikes, right, and you're expecting to be in a period of elevated volatility where traditional, for secular trends that have held up for, heading into it are about to underperform. How do you position yourself to come out of that better, right? That's something that's I've been kind of just racking my brain about. Like, is it energy? And maybe with the current context, right, in terms of
Well,
geopolitical
so
stability.
energy and utilities are super dependent on rates, right? And probably the correct answer is like DCA into like BBB or UST with some duration, right? And slowly port allocations over to like long treasuries on the on the idea that yields will decline over 12 to 18 months, right? But consumer staples tend to overperform um, pretty well in higher implied volatility environments, or at least they're very stable, and then they have some improvement afterwards. Healthcare tends to have pretty just negative beta as a sector anyway. Not health tech, but healthcare.
So you're talking like UHC or
Uh, yeah, UNH. I mean, insurance. insurance can be a good long, because well, insurance is gonna mirror the going long duration, right?
That's true. Yeah, that's what I was thinking. Is it's still pretty rate exposed, right?
Yeah. But I mean, yeah, honestly, that's your best bet, because an equity collapse, there's so many other mechanisms, like on the plumbing side, that it kind of doesn't matter what you pick, because ETFs have made market direction ubiquitous by being like cross asset exposed to such a ridiculous degree that everything is just linked together, right? With very few stocks fall outside of that, especially bigger companies, and so they're all kind of equally exposed, right? I would say that you could short REITs. Generally, a rising implied volatility environment is really bad for forward projections of the real estate market. Um, Energy's tricky. Yes and no. Like right now, we should probably have a ton of risk premia priced into energy, right? Like oil should be way higher. We're like on the cusp of a war in the Middle East, and while none of the escalation has led to anything more severe, it only takes like one random event to turn that entire thing on its head, and yet, given supply chain constraints and reduced output, I would say that oil's trading like 12 $10 $12 a barrel below its fair price anyway, right? So oil's like showing a lot of distinct short interest, and what that is that's people betting on a weaker dollar. Like that's I think energy right now is kind of the weak dollar rate cut recession hedge, right? So people on oil are betting that we get a recession or we get rate cuts, and the value of the dollar and inflation both drop rapidly.
Okay.
I think they're wrong, because I don't think the rate cut path is something that the Fed's going to want to do. Which could see those positions like blow up should any geopolitical risk take center stage, right?
Yeah, that all makes sense. It kind of clears up some stuff for me. But yeah, like it's just it comes down to sort of where the concentration of your diversified portfolio is gonna sort of like the bell curve is gonna be centered at, right?
Yeah, I mean, this is one of the reasons I try to buy stocks where the options chains are moderately liquid, because in periods like this where uncertainty is really high and risk of increased vol is very high, I like to sell like big chunks of in the money calls. And then if we get through that period, I get a little theta decay and I can buy them back, right? If there's no real significant change in financial conditions. But if vol spikes, everything goes to shit, then I can collect all that premium on the downside.
Are you saying you like big chunks and you cannot lie?
I mean,
But not what?
Nuke isn't here to talk about his chunky blood right now. Did you miss that?
I did. I
Oh
don't
yeah,
know anything
Nuke. So
about that.
Nuke has like a mat that vibrates him on an ethereal plane, and it separates his chunky blood. Oh, he is
Ooh,
here. Yeah,
that
and
sounds
he showed me the scientific evidence. He took his own
that
blood
sounds wrong.
and put it under a microscope. I will say that his blood looked distinctly separated.
I might have.
Is that a good, here's the question though: is that a good thing? Do we need to separate our blood?
It's like a all natural organic warfarin.
Yeah.
I can kind of see this. So if so, like breaks up. Yeah, but how fat? How much
Here's
does
my
it
problem. If
vibrate?
your
Like
venous
what?
system, like if your blood's not chunky enough, your veins are gonna get smaller, and thus making you less resilient to future chunky blood.
Mm, you
Mm.
Yeah,
know,
I don't
That's
know.
why I keep my blood thick, like motor oil, so that
I inject corn syrup into my veins to make sure it's nice and thick.
yeah, smart.
Or cornstarch, my bad. I make some oobleck and then I put that in my veins.
You should try. You should just try like something in the pit viper family. I heard that's a great coagulant.
And then if I need to thin my blood out, I put myself into a centrifuge to separate all the plasma from my blood inside my body.
Have you ever
Why don't
tried
you
just
guys
like
get a blood boy like a
basking in the
normal
northern
person?
lights?
I haven't tried that yet.
Just get a blood boy like a normal person.
Oh, and then you can then you can give them your chunky blood and get their nice thin watery blood.
Yeah.
Oh, okay.
Get their youthful.
Is that why you have
adrenochrome or
children,
whatever it is.
J-Fresh?
Yes.
Oh, okay. That makes so much more sense now.
I mean, he had
Also,
to have
you
one
you could
because he
also
needed more
probably
blood.
the thing you should try first before you try all this other stuff: drinking more water.
Bullshit.
We're gonna need to conduct a bunch of experiments on Nuke. I think that's what we're
It sounds
hurtling
like
towards.
it sounds like his body is willing.
Yeah. Let's see how
Uh,
separated
yeah.
we can get his blood cells. Like, let's see if we can just get an entire sample and it's just one cell, just one red. Like, if we can get him to that point, think how efficient he'll become.
Oh, dude, I know, right? His VO2 max is gonna go down through the floor.
I love medicine's so much fun for so many people. It means so many different things to everyone.
Oh yeah. Dillionaire medical malpractice stream.
Okay, somebody had a question. I'm long USO since 69. Okay, I just kind of did a little bit of macro analysis on oil for you there. I think I touched on the parts of it I want to. I do think that oil is going to run into some supply deficits towards the end of this year. I think the EIA is a little too bullish in their projections on what reserves are going to look like by the end of the year, and I think OPEC's maybe got a little bit overboard, but I think there's a median there where we still run into a negative, but we run into a deficit going into like Q3, Q4. So, and I think that decline in reserves over the next like 9 months is going to be stabilizing for oil. I mean, that's outside of any major macro moves like the dollar crashing or something. But right now, it looks like the dollar's going to squeeze to 150. And if the Fed raises rates, maybe even higher. I want to buy so many houses in London if the dollar gets above the pound.
Yeah,
That'll
can
be
I have
fun.
one?
I don't know. Do you want one? Do you want to live in London? I don't know if that's the
I
place for you, Dork.
I don't know if I want to live there. I just would like to rent it out
Oh, okay.
and then have like some mobster go and like enforce, my rules. Some giant ball dude, big giant bowling ball.
I'm sorry, this is a stupid question, but did you say mobster or lobster? Because I heard lobster.
Mobster or lobster.
It would be a lot funnier if just some guy in a lobster suit showed up. And
It'd be terrifying, huge bald dude in a lobster suit. I'll do it.
yeah,
I'll pay him enough.
Is there a numminess threshold to dump Vega positions? I've just been selling a little bit of them the whole time.
A numminess threshold? Is
I
that
don't
like
know.
some sort of furry thing?
Probably.
It's a fin dom thing, and I think he means when do I take profits is what he's saying.
Yeah, I took some profits on short Vega or like my long Vega positions last week. Like I sold a shitload of them. They were up so much. Like September 4200 puts just rocketed. I still have like I don't know 40 35 contracts left, something like that. I'm just gonna sit on those because they're paid for. That's what you want. That's the position you want to be in. You want to have exposure that you didn't pay full price for.
Yeah, covered cost basis is the best thing in the world.
Yeah.
Like, there's literally nothing better. If you're up like 100% on a stock, do the exact same fucking thing. I mean, it's like it's just common sense, right? Because then you just have free shit,
What do you
and
think we
and
are?
you
The
know,
C-suite or something?
I had
You think we
I
could
have
just sell stock anytime we want?
I have a
okay, sure. If you're
buddy.
using portfolio margin like a degen, then you can't. But
I have a buddy who bought a bunch of stocks in 2021 and got burned, but one of the stocks that he bought was Nvidia, and he bought like it wasn't much. It was like 16 or 20 shares of Nvidia at like 100 and something dollars. And he was telling me about this a couple weeks ago, and it was trading at like 940, and I was like, you should at least like start thinking about selling it. And he was like, no, I want to break even on all these other
Oh,
shitty stocks I
Jesus.
bought. And
that's so greedy.
I was like, dude, you're up so much money on these. Like,
Not
it's
anymore.
like,
He's not.
no. I actually have to ask him to see if he sold, because I was like, for a while, I was like, I was kind of half like, I'm not your financial advisor. I can't tell you what to do. The second I give you an advice, you're gonna do it, and then the market's gonna do the opposite thing of what you wanted, and then you're gonna blame me. So I'm like, you have to figure it out yourself. And I was like, but if it was me, and I really wanted to keep holding it, I would at least do something like sell half of it here just to get myself like in the zone of like, all right, I can sell this stuff. It's not a big deal to sell it. Like, just so you're not a bag holder forever.
Retail doesn't think that way, a la GME. You know,
And
there's still people in
I
that fucking
literally told him
channel.
to sell the top. I literally told him to sell the top, and he didn't. And then he's like, I blew it. And then I was like, well, you might get another chance to go over 900. And then the other day, it was like a week ago, it went to like 906.
Yep.
And we're having the same conversation. I'm like, dude, if you're really concerned about it, why don't you just like set a limit sell or a stop limit at $900? That way, if it keeps going up, you're fine. And if it drops, like, you'll still get half of it sold at a massive profit. And I don't know if he did that, but I don't think he did.
Probably not. Should we talk about?
He had so many chances. Anyway,
should we talk about the 5,000 strike? Because this is the only thing
on
anywhere.
Nvidia?
No, on SPX. This is the only thing anywhere near the money that gives me pause on the idea, like on more downside, because so they're short. They're still short, like the call side on that, or short the put side on that. What like I know it's ridiculous. It's like 760,000 contracts. This is after the expiration, right? And then they're long the call side 650,000 contracts. So the amount of just raw fucking delta present $33 out of the money at 5,000 makes me think that any bounce that can get above that and hold has got some serious legs.
Well, yeah, because they're just going to lean
Yeah.
into it even harder, right? If like I see two outcomes of 5,000, right? Like, I expect a retest of 5,000 like next week,
Yeah.
and one of two things is going to happen, right? Either we're going to break 2,000 or 5,000, and they're just going to lean into it as hard as they can, right? And the market's just going to fucking rip, or we're going to get the piss rejected out of us at the test of 5,000 and just go straight down. Right, because because if the game is up, right, and people are aware that it's no longer tenable to do this ridiculous short ball strategy, everyone's going to be looking for every opportunity to hit the exit button. But if people still have faith that they can continue this strategy, then we're gonna fucking rip right through 5,000 because they're just gonna just fucking gas it as hard as they can.
Yeah, but I think that'll still fail.
Part of the challenge with that, though, and what's very different between where we are now and where we were in October when they were very successful at doing that, is that there was a lot of sold calls on the chain with very high depth all the way up, and so they were able to squeeze a significant amount out of those sold calls. That's really just not there right now anywhere near the same way it was then. They've had really no time to really build up a significant sold call position. I mean, sure, there's some. There will
Yeah, we've been
always be
dropping too
some, but
fast.
it's gonna be just a lot harder, I think, to just start ripping it. And you kind of can see that. You could see that, various points throughout the week. It seemed like every time in the afternoon I popped open the chart, it was like rocketing straight up and then rocketing straight back down.
Mhm.
So what you're telling me is all the covered call ETFs are already full ported by all the degens. So they can't full port any harder because they're already full ported.
Yeah.
And
Okay.
partially, yeah.
So it sounds like to me is that the inflow into those ETFs is
We've also
probably
just
gone.
been dropping too fast for any like substantial short call positions to build up near the money.
That's true. Yeah, that's
Like
it's done
we
to a full
need
effect.
like a period of like sideways in order for that to like that upside squeeze thing to become a risk.
Yeah, like a
And we've
week of
fallen
consolidation.
far enough that the puts that are in the money are longer dated, right? Which puts just this kind of big weighted blanket over the market, right? Or at least over like intraday price action. Like we still closed below the JPM puts on Friday, despite several attempts to get us back above them into close, right? And
Yeah.
we failed the 5,000 test earlier in the day. 5,000 was barely supportive anyway because the MM is just so far from neutral at this point, right?
Yeah, and if I'm looking at the SPX and SPXW chains, and what one thing that's really interesting that pops up is on the SPXW chain. So calls have been selling off from like 5,400 all the way down to 4,600.
Mm-hmm.
But there's this little pocket of calls that have been growing from 5,000 to 5,200.
Yeah, that makes
So
sense.
that could be some fuel there if they can pop it back into that region. But there's so many calls that have fallen off at
You need
5,000 that it's
we need something that's going to generate a lot of uncertainty or a lot of neutral positioning for them to get, I think, a leg up. A PCE
yeah
maybe
they've
this week.
there's also like most of the Mag 7 is
Earnings, yeah.
earnings. Yeah, so there's all sorts of stuff to go. Um, you've got Mag 7, you've got earnings, or you've got PCE, you've got GDP.
Yeah, GDP. Well, it's not preliminary, right? It's just the adjustment.
Is it
I think so.
quarter one advanced?
Um, day is it on?
I thought it was on Thursday.
Maybe. Oh yeah. Okay. All right. Yeah. Oh, this is
Yeah.
okay. So this is the yeah. This one's important.
Yeah, it's the first quarter one
Why
print.
did I think that was the last one? The last quarter four? Yeah, I guess so.
Yeah.
All right. Yeah. So this is important. The advanced projections for GDP are going to be they're expected lower, although I highly doubt that's going to be true.
Yeah, so I'm looking at the puts, and for the monthly chain, like we mentioned before, I mean there was they've pretty much just been adding from like 4,500 up to 40 or 5,300. They've just been adding puts, which is kind of weird.
Yeah.
And then falling off below that, and then but on the weekly chain, a bunch of puts fell off from like 50.50 up to 52.50. Then there's also a little pocket that were added in like that 5,000 to 5,100. So it does kind of seem like if they're sold puts, and well, whether they're sold calls or not, I mean, there's this little pocket right there between 5,000 and 5,100 that they could use to squeeze upwards, but they have to get back through 5,000 to do that.
So
So
it looks
that's
like
kind of the.
here's something else to consider. Notionally, it looks like let me see. We've got I gotta add this up. But this might also be a factor into the middle of this week. We're at 80, 85. We got about 185 in like notional gamma falling off between Monday through Friday. And I think that's about 12, 13, like about 21, 22% of the total gamma on the chain. 6.7% of that falling off tomorrow. And then a bunch falling off Friday. So the middle of the week should be kind of spicy. Only like 8% of the total gamma on the chain is falling off between Tuesday and Thursday, and it looks like all of that is negative. So after tomorrow, we might see the fall off in gamma kind of turn the cover bit a bit, or at least we'll see like gamma neutral, delta neutral drop maybe a little.
Yeah, I'm just trying to get a read on some of this. So it looks like there's a big pocket. Oh, that's way down there. There's a big pocket at like 4,400. That's probably if we were going to just dump. That's probably where we'd stop.
44.
Yeah.
Yeah. I mean the technical support there is at like 44.50 on the monthly. So that kind of makes
I don't know.
sense.
I
If we
I
go much
feel like
below that, I think we just crash.
yeah. I kind of feel like something's about to happen. People think it's about over and this is just a healthy correction, but I think this is different. We'll see.
We will see. I think you're right, and that's why I think on the test of 5,000, we're probably going to fail it.
I just don't know that we're even going to try to test it. I think we're just going to keep grinding down until
This
the
is
weight
definitely
of
one
the
of those
market.
weeks where we could just dump.
Yeah,
Right?
the
We're
weight of
past
the
the
market.
OPEX.
Yeah, that like the I'll try it one more time. The weight of the market is just it's just too large, right? And they're trying to fight it, and they can't even get a single bounce. I mean, you look at the daily candles; there's just nothing. And it's
It,
just a straight grind down. There's not like little bumps like when in August where we always had like little bumps up and down. It's just down, right?
Yeah.
There's no short. Everybody's just long.
Yeah, the incentive right now, especially at these prices, is to get the fuck out, right? Like that's really, there's not much incentive to like when you think about the whole context of where things are headed in the economic cycle, the global political cycle, like it's not looking like a good time for risk on, right?
Yeah.
So
Speaking of getting out, I feel like we have to talk a little bit about Nvidia and SMCI too.
I haven't looked at the tickers for them. Is Nvidia fucking tanking? Ooh,
Yeah, it was down 10% yesterday or
oh
Friday,
shit.
and SMCI was down almost 25%.
Yeah.
Tinfoil hat time. There's a little bit of stuff that came out at the same time, so who knows what the catalyst was, or if there even was a catalyst, right? It could just be, the market's collapsing in on itself from all of the leverage. But a couple of things that could be indicative of something. So apparently, I haven't followed it in the past, but apparently SMCI usually, I guess the last four out of the last six earnings, they have pre-released some information before earnings,
Mm-hmm.
and this time they announced their earnings, which I think are on the 30th of April, and they did not release any information. And then it's down 23%. So there could be scares, and then that of course could bleed over to Nvidia. There could be scares if there's less demand. Demand is already dropping off for H100s and things, and people have dramatically mispriced growth, and that could have been a catalyst for a correction there. This is uncorroborated. I haven't seen, what I would consider a critical mass of credible sources saying this, but there were people showing like Alibaba discussions, like forum posts, things about vendors who were trying to sell H100s in China and saying that they could, they had all this inventory and can get it to you within 1 week.
Oh, I saw that. Yeah.
Yeah, and so if that's real, and there's evidence mounting that they are selling stuff into China, and it's going through, SMCI or whoever, then there would be, a lot of issues there with export control rules and things like that. I think, and it's just really important as people look at these things drop. I mean, a lot of people were confused about Netflix. I mean, Netflix also went down 9% after earnings, and people were really confused because their revenue growth and their earnings growth both looked great. And so it's like, why is it going down? This market must be rigged. Nothing makes sense. But if you look at Netflix, it's so overvalued. I mean, there's like 10 years of 15% year over year growth already priced into the stock, right? So
Yeah.
so when it's all growth and it all requires this massive amount of growth, you look at deeper into the earnings, and it says, oh well, we're not going to report our subscriber base growth anymore. And if you dig into the numbers, all of the um, subscriber, like meaningful subscriber growth, was it's first of all, the number of subscribers quarter over quarter, the rate at which it's growing is slowing down, so it's starting to slow,
Mm-hmm.
which is one big sign for growth. And then the other one was that dollars extracted per subscriber was flat or negative in every international sector. It only went up in America. And so you look at those things and you say, okay, well, the growth story is uncertain, and you've already
Yeah.
projected such ridiculous growth that, yeah, it's got to come down, right? Because it's all growth, it's all future growth valued. So all of these stocks are like that, right? So Meta, Microsoft, let's see, whose earnings this week is Tesla this week? I know it's Meta, Microsoft, Alphabet. I don't want to say Tesla.
Yeah. Tesla, Meta, Microsoft, Alphabet, Caterpillar.
Oh yeah, there's a ton this week.
Yeah.
Couple other,
IBM,
yeah, a
Visa,
couple other,
UPS.
Yeah, UPS will be a big one.
Exxon and
Bellwether.
Chevron at the end of the week. I think
Yeah, so even if
AMD,
these
Amazon,
companies,
Amazon, Apple are next week.
yeah, so even if these companies post growth, it's got to be enough growth, and the growth that's being priced in is pretty insane. And so, as the narrative continues to very slowly shift on LLMs and their perceived future influence in the market, if people don't start seeing numbers, I think they're going to start punishing pretty heavily. And I don't know how much it's really going to matter on earnings. I think it's more going to go into revenue, and it might even be all concentrated in growth of their high performance compute sector, which is where all the AI shit is packed in. So yeah, we could be in for a wild ride. And most of the earnings growth that's being projected for this quarter and even the rest of the year for the SP 500 is basically those 7 stocks still, with the exception of Tesla. Now I don't think anybody's really pricing it in for growth at this point, except for ARK.
ARK and Dan Ives.
Yeah.
Dan Ives is starting to turn a little bit.
Dude,
he's a good little trend follower.
Did you hear his proposed turnaround plan for Tesla?
I haven't listened to him in a while. I got bored.
He was basically
annoyed.
saying price down all your cars into the dirt, initiate a huge stock buyback, and question mark successful company.
Yeah, that makes sense.
Perfect. I see no problems with that plan.
That's how corporations are actually run, Dork.
I know. Yeah, basically the meta
Dan
strategy.
Ives must be so long Tesla right now.
So many people are so long Tesla right now.
It's so dumb. It's like a $12 stock.
I
Why is it trading?
love reading their copium posts.
It's getting good.
Yeah. They're really starting to feel that like sense of overwhelming hopelessness, and
But they're still pretending like they're just more amped than ever. We've seen this story play out. Actually, we're all seasoned veterans, I think, watching that happen to the meme community from
Watch the stocks
2021.
we love die as they're
Yeah,
mismanaged.
this is it'll bounce and everyone will have their faces ripped off and we will be victorious and we will be the ones who'll be rewarded for our loyalty.
We can just wait until calls are free, right?
Yeah.
I think we go long when calls are free, like we did in October 2022.
Yeah,
when calls were
they're going
priced.
I don't hate it.
All right, I'm. Who wants to start this week's projections?
Yeah, let's wrap this up.
All right, I can go if you want.
Let's make JFresh go first.
Oh, I won last week, so I can't go first, right? We have to say that I won last week.
Hold on. Your end of week price projection was 160 points out of the money.
But it was the closest, so I win.
Okay, fine. You can have it. But it's a shitty win.
Kirk, I gotta take what I can get here, okay?
Goddamn end of week. At least I projected, me and JFresh at least both projected that the end of the week would continue down. And you were like, nope, 100-point bounce.
Yeah, I'll be honest. I forget what I predict like an hour after I do it, and then
You didn't even predict anything last week. You just had me draw
I just said flat,
a choppy line. No,
yeah,
no, you had me draw like 100 BPS wide choppy line.
Oh yeah, that sounds about right. I'll try to predict something now.
All right.
Let's see. 1, 2, 3. Wait. 1, 2, 3, 4, 5. End of the week, straight line, 47.25.
Jesus Christ. All right, hold on. I gotta.
a straight line down.
Yeah.
All
You're a
right.
sick fuck.
There's a reasonable chance that this could happen. I'm not missing this opportunity for a continuation. And for all of the people that are long, you're welcome. I've now confirmed your bounce for you.
Is it my turn now?
Yes.
Okay, so here's what I'm going to do, JFresh. Okay, so open flat.
Yep.
And then end of day Tuesday, 5,000.
Ooh, 2 days to get back to 5,000? All right.
Yep, and then
Oh,
draw a
shit. Hold
line
on. I
down
fucked
to
it up.
exactly where JFresh's finishes.
Come on.
You're going to
So I'm going to
predict
beat
the
him
same close?
in the middle of the week.
What a dick.
I feel like there
So-
should be a rule about that. You have to pick $1 above or below.
Yeah, you can't have the
all
same
right.
close.
All right, I'll do $1 above.
Of course you did.
All right. You guys are going to make me be the bullish responsible one?
This is what we do.
Dicks. All right, I think retest 50 25. Jesus. Hold on. I gotta think about this. All right, I'm gonna be bearish, but I need to I need to say that there's another outcome that we should at least inform people of.
Do the break 5,000 outcome and just draw a straight line up to 5,250.
I mean, if we cleanly break 5,000 to like 50-20 ish range, we're going back to 5,100 plus easy.
Yeah, for sure.
All right, so I'll do this one because this is definitely possible. But
Where's your last day? What about your Friday?
Wait, that is son of a bitch. Did I make it too small? I did. Hold on. I'll just
shift things over.
Yeah, just do a little scoochy scooch. Or redraw it. Revisionist history, Gherk.
Oh, he's going back to bullish. He doesn't know what he wants.
I really don't want to be bullish. But
Just we'll let you. You could just draw. You get to draw 8 different lines, and we'll just erase all the other ones at the end of the week.
okay.
Perfect. Yeah, just run a Monte Carlo, and then what we'll do is we'll pick the closest match and say that was you.
Fair.
You guys are strangling me.
Yeah, we are. But I'm going to note that there's a potential that we break here and we test here. And that could carry out into the end of the month next week. Like that. And I don't know what to make this. It's just, this is something that could happen. I'm not going to say it's my prediction, but that's a distinct possibility on a turnaround.
All right, move your head a little bit. I'm going to get this dot plot tracked out, and then, because it's set in stone now.
All right.
You got to go the other way.
Move the other way.
Yep.
Waiting for it. Wait for it. And there we go. Okay.
Yes.
All right.
Perfect. All right, let's confuse the pores with the yellow line because no one's going to know what it means.
Yeah, I agree. That's what I'm hedging. I'll tell you what that fucking line means. That's where my puts are hedged.
Oh, man.
25 to 51.50.
I think the market is like, even though we've gone down a bunch, right? To say we've picked a direction is still a little premature, but by next week, I think we will have picked some kind of a direction.
You know what? Fuck you guys. I'm taking Black Monday. Retake your screenshot, Dork.
What? No, you can't do that. You
Yeah,
can't do that.
yeah. Fuck you guys. It's past OPEX. I'm
God damn
going.
it.
I'm going Black Monday.
You son of a bitch.
I'm going $1 more Black Monday.
Well, I'm going straight to zero, assholes. You guys can't do this.
Yeah, we can. We can do whatever we want.
You can't triple stamp a double stamp. Lloyd. Lloyd.
What is going on?
I'm picking Black Monday.
What? So you say we're going to go into full-on chaos.
Oh, you son of a bitch.
Yep. There.
Girk's such a dick.
Fuck you guys.
All right. There we go. Okay.
I might actually have to buy in under 4,500. Start buying in.
Someone's got to pick Black Monday on the OPEX expiry every month, right? And then one of us will eventually predict a market crash.
I thought 47.25 was pretty aggressive. Now my line just looks stupid.
I don't think we're gonna get a Black Monday.
I don't either. I don't either. I think there's too much stability.
Quad witching. I think June is going to be way more important.
But it's way more fun to predict Black Monday than it is to predict slightly more down than JFresh.
It's true.
Also, now it kind of looks like a now it kind of just looks like a Monte Carlo.
That's true. That's very true.
Which means that we'll end the week somewhere here. Nice.
We did it.
We did it.
We narrowed it down for everyone.
Level by level, day by day. That's the only way it's accurate.
It's only a $650 price range, you guys. Come on.
We all have been through this for a year now. We know that futures are going to open tonight and they're going to be up like 15%, and then we're going to go to bed and we're going to wake up tomorrow and they're going to be up 0.6%, and we're going to be like, God.
Yep. And then the market's gonna open, and then we're gonna drop 120 basis points after everyone goes long.
Yeah, after like that first 45 minutes of the day where everybody's just piling in to the bounce.
Oh yeah.
Sounds good.
Right on. Yeah,
how much is my range to the downside on this? Hold on. I must have packed a lot in here. 10%.
You did around 10%.
Yep. Nice. You guys are what, at 5? You guys are such conservative bitches.
It's not quad witching, dude.
So? Even better.
We're going to get a bounce in May, or in like mid-May, and then in June is when we can get the real crash.
Wait, hold on. COVID crash was the Fab OPEX, not the quad.
Yeah, but that was also a black swan event. This is just mechanical.
I don't. It's an awful lot of flapping.
You're an awful lot of flapping.
Oh wait, was September?
Quad witching.
True.
Yeah, but this is such a unique.
Yep, that's why I think it's quad witching.
When was the flash crash?
Volmageddon or the
flash crash?
Volmageddon.
Volmageddon was Jan. It was like Jan OPEX, right? Yeah, Jan OPEX. And then the rate thing was like started October OPEX. I don't know, man. A lot of these aren't happening on quad witchings, Dork. Look at 2020, like August, April.
Well, those
December,
all had to do
those were all fucking 10% drops, though. What do you think this one's not going to have to do with rates?
Well, no, I mean, no. I think that what this is like, if if we're going to have a flash crash, right, it's going to happen on a random OPEX. I will give you that. All right. It can happen anytime. But where most of the exposure is sitting right now is in June, right? So just like a random OPEX causing a flash crash, we'd have to have a way harder pullback. Right?
Okay, but Dork,
Yeah, but
all
what
of
if
the
June?
exposure is always sitting like 3 months out. It's that's
Yeah.
how people just position. I don't think that's statistically meaningful.
Yeah,
I
also,
think that
if
they're
that
going to hold
positioning
on.
capitulates, the impact is far greater.
I think they're going to hold on a little bit longer. I think that there's so much vested interest in it that you guys are
You think they're
discounting.
waiting till the end of the month?
I
Yeah,
think
but
they're
that's what's going to make it even better. They actually have a lot of exposure at the end of the month.
Yeah.
there's a vested interest that I think you guys are discounting, and they're going to fight for it even now.
What do you
They're
mean,
not
you
discounting
guys?
it.
You and him have the same fucking prediction.
Both of you guys are going full fucking turbo bear.
But I
No,
think, yeah,
I'm going full bear. You guys are like conservative tail end of the correction into a bounce off the long term trend. I'm saying fuck the long term trend. Mean reversion back to like the 2-year VWAP.
Fine. I the full bear case, just I don't think it's ready to play out yet. All the pieces are in place, but I think that there's going to be a serious fight pretty soon, considering how much fight there was back in August.
I think they've seriously fought every step of the way and they're fucked. But I'm
I
still
don't
gonna
think they
hedge
will.
that. I'm still gonna hedge that 5,000 to 5150 range, just in case.
So I'm going to full port SPY 450 May puts. Is that what you're saying?
Hold on. I don't think that's the conversion. Give me a second. I can just convert it. So it would be. Oh, I gotta fuck with this. Hold on. I need. So it's like the SPY. Yeah, 450 could print on that.
Ooh. All right.
Just barely, though.
Fine. I'm
Like,
buying a 475 May put then. If this doesn't prompt Girk, I'm blaming you so hard. I'm going to be so mad at you. I'm
it's
just
not
going to
gonna
be
print,
furious.
right? Like, this is so ridiculous.
It's going to be a weekly 450 at that, actually. Now that I think about it, I should just go for the weekly.
How much is it?
Probably less than $1.
Yeah, right? Like,
Let me actually check. Okay, SPY options. Let's check the weekly for April. What is that going to be? It'd be May 3rd, I guess. Or no, it'd be April 26th. Let's see what's going on here.
April
Yeah,
26th.
450.
The 480
It's
is
8 cents.
$6.07 or 67 cents.
No, the April 26th is 37 cents. So I might get like 3 of them. And if those go $25 in the money, I will fly to New York and I will kiss you right on the mouth.
Okay, hold on. How much is that worth at a
will you
test
film
of
it?
450?
I mean, it's worth $2,500 at 450, pretty much.
No, it's worth like
A 475?
$600. Oh, the
No,
475.
I'm talking about a weekly
Oh, okay,
expiring next
weekly
Friday.
475. Yeah, on a test of 450, you're at like
I would just say Delta One and just discount all the
$2,400
beta.
a contract.
Yeah,
Just get the SPX one at that point, right? How much is an SPX? Fucking $47.50. It's $3.
yeah, that's $3. I'd much rather be 3-to-1 leveraged on it.
Yeah, but if we test 450, you make 30 grand.
That's true.
I mean,
But do I want to risk $300 or $180 is the real question, Kirk. You underestimate how poor I am.
I would never do such a thing.
We're not doing that.
It's got a
All right.
2% chance of profit. I mean, I don't know what you want.
Actually, bold solution. Quad witching is a myth because we don't have single stock futures anymore.
Sort
Right?
of. Well, we do. We do and we don't. We don't have any publicly traded or live. We don't have any exchange for single stock
Yeah.
futures, but they still
Fair.
very much exist.
But there's nothing that says they have to expire in any. Yeah, those are the continuous contracts, not the discrete ones that the
Yeah,
Yeah,
boards have
they'd be
access to.
counterparty settled, but there is still futures expirations on quad witching.
Yeah.
And there's futures expirations on quad witching.
The
Quarterly
4750 just went up to 21.99. Here's the problem with the 4750. If I'm right, it's gonna open in the money. It's just gonna fucking.
Yeah, right. I'm gonna have to buy it at like $6. I honestly, yeah, there's no way to get in on that early, but I mean, ultimately, if JFresh and I are right, there would be a point in the middle of the week where I would be heavily profitable. But it'd be for about 3 seconds, and then as soon as there's a green candle, it would die immediately.
Yeah. You'd have to sell it on the way down.
Yeah, exactly. Which, I mean, doing that like is so fucking hard.
It's not easy. Yeah, because the second the price stabilizes or someone sells the option, it immediately goes to nothing.
Yeah, exactly. So I'd much rather just not do
JPM
this
sold
instead
puts.
play something closer.
So when the JPM sold, if and when JPM sold puts go in the money, they roll.
Yep. Fuck
That's
the
what
Bears.
happened. That's what happened in October. That was a big part of the reversal in October 2022. Is the sold puts just went in the money and they rolled it off, and the leverage from that turned shit around and pushed the bounce really fucking hard. Holy shit, that was crazy. God, I miss those days.
I think we're getting pretty close to being back to them. I mean, if VIX goes over 20, or 25,
Where
we're
are
in
the
spicy
sold puts
town.
right now? They're at they're way the fuck out of the money still. I think they're like but the June sold puts are at 41.85. So we got a long way to go before we're anywhere near those.
Let's tap it.
Yeah. It'd be really cool though, as if the April long puts on the collar go in the money.
That'd be nice.
Those are at 46.15 now.
What if we just go down by 20 bips every week for the next 5 years?
Oh God, I hate you. I don't think we're in a position where we have to worry about that kind of thing happening. After a crash, maybe, but I don't see
it's
that
much more like
happening
it. I
with
mean,
this
this
much
is
leverage.
the scary thing right now is that like any drop, at some point, the Fed's going to have to start monetizing all this debt.
Yeah, I agree.
And once that happens, everything just rockets, right?
I just don't think they're in a position to do that. I mean, not everything. The dollar won't.
Yeah, true.
I think they have to keep the dollar strong. If they cut rates, banks die. So, and I think after March of last year, we can assume that their primary goal is to prevent bank failures, right? And if that's the case, a rate hike is more likely than a rate cut. Because I think at this point, any rate cut is going to be met with bank failures because the 10, 20, and 30 are going to rocket.
Yeah, it's like a Mexican standoff, right, between the Treasury and the Fed.
Yeah.
Really interesting stuff. It's incredibly interesting.
The
Like we're in such
JPM
a
short
unique
put on
time.
the big position is at 41.85.
Like can we just take a moment to appreciate how crazy right now is? Home prices are insanely high. Volumes are down through the core of the earth. We have gold pushing all-time highs at the same time that stocks are near their all-time highs. We have deficit spending, growing faster than GDP. We have, a Fed who was way too dovish, and now they're pushing back to some sort of a neutrally hawkish position. It's just such a crazy, crazy point where everything is just so confused. Everything.
Gold's not going to 3K. If the Fed hikes rates, gold's going to rocket.
Yeah.
There won't be any alternative to the dollar besides gold at that point. It'll be either dollar or gold, because our deficits are gonna, like, our deficit spending on interest is gonna skyrocket if the Fed raises rates again. It's already sky high, but it's gonna get way worse.
Yeah, we've been in a recession for the past 3 years, right? And
Yeah, we just got what,
really have,
95 more billion on the pile
Yeah,
it's
that we're
crazy.
just giving away to another
We're
country.
yeah, it's just
we're
it's
also gonna get
crazy how much.
downgrades, which is yeah. I think that's the biggest thing with the rate cuts, right? Besides the insane risk it presents to banks, is if they go the rate cut path, we're getting downgraded. Absolutely. Like if we trail off QT or we cut rates, everyone's gonna downgrade us.
That's going to be fun.
If we even make any kind of move that implies that we would pivot to a QE environment, Moody's, S&P, Fitch, they're all downgrading US debt.
Here's something to think about. The Congress is mulling over. I don't know if they've pushed this through or not, but they're heavily considering at least taking seized assets from Russia and essentially somehow giving it to Ukraine. But if we are seizing assets from other countries, some of which inevitably includes our own treasuries, are we defaulting on our debt? Technically, are
So
we?
we're technically allowed to destroy debt. I mean, we're so IMF says no, but our constitution says we can. We don't have to honor debt from an enemy if if we've declared war on them. That gets tricky. And mostly we just care about locking that debt up to maturity, right, without violating any of like our international trust standards.
Yeah, but if we give it to Ukraine, we're
Yeah,
basically
it would be
seems
problematic.
kind of an interesting. Anyway, it's fun to know that they're thinking about that
Although
right
I mean
now.
that could be considered like a seizure, like an asset seizure, and to recuperate or like remunerate losses suffered because of the destruction from the war. So more in line with something like the post like the Versailles Treaty or something like that. Except there's no treaty in place. So we're just inventing our own resolution, but I mean, I don't see why we couldn't.
Sure, we're definitely testing the limits of what the world is allowing us to get away with.
Which is whatever the fuck we want because they're
So
indebted
far,
to us,
yeah.
right? Like even fucking China's been buying up US debt like crazy lately. And after spending 8 years reducing their treasury holdings, they now need to buy US denominated debt just to pin their currency and keep it from failure. So it's just like everyone's our bitch and we just do what we want.
Yeah,
Damn straight, fiscal dominance.
Which yeah, but
fun.
that also means that gold just there's no I don't think there's any stopping point on it. Like the stopping point on gold is how far the US is willing to push this. And so far they've showed all the fucking way.
Whoa, 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 Girk. Whoa, whoa, whoa. Wait a minute. Wait a minute here, Girk. Are you saying Peter Schiff has been right all along.
I mean, no. But yeah. I mean, so he was wrong because none of this shit was happening, right? So when he was making these predictions 5-6 years ago, there was no validation to them whatsoever. It was just conspiracy, right? And then as certain things have fallen into place over time, it has become more true, but there's many facets of his thesis which are still complete bullshit.
Well,
Give him the W.
I think that
Guy needs a win.
Peter Schiff, what he has been, I think his prediction more than anything else has been spot on based on the human behavior of our leadership, right?
Yeah, I mean,
Like,
sure, but so's every other thesis that predicts the worst from our government, right? Which is a lot of them. So
even like
why does Peter Schiff give it? There were economists writing about this in the fucking 80s.
yeah, it's true.
So
I mean,
he's it's not like his ideas are novel. They're just assigned to him because he has more reputation than others, which is
well, he
which
goes
is
on a
a
Fox.
bullshit. I mean, that's like like everyone gives Burry credit for predicting '08, but there was some like Indian economist who called that shit out like 5 years ahead of him, right?
Yeah, no, I
And as
mean,
far as like the path of US fiscal dominance, people like economists have been decrying that for decades. Peter Schiff is hardly this poster boy for it. He's just
All I know
gone.
is that we all should have just been listening to Tom Lee this whole time.
Is Tom Lee still bullish?
I don't know.
That guy's
He
a
blocked
moron.
me like
Yeah, he blocked
radio
me
6
too.
months ago.
I
He has
explained to him how inflation in Japan works, and he blocked me immediately. He does not need his investors understanding that.
Let me actually look up fund strat. There it is. Let me see what he's been posting lately. Literally just completely radio silent.
He YOLO'd the whole fund into Bitcoin at 70K.
I'm gonna be able to follow him again when he deletes his account and starts a new one.
Yep. That's right.
If he deletes his account, that means he's been deleted from a lot of fund manager accounts. Oh man, poor Tom Lee. I hope he's doing okay.
What about alien behavior? Would you stop talking? Look at the chat. Like 12 of the last like 13 posts are just from you, just saying nonsense. Like he's welcome to Brazil, fiscal dom. What? Shut up. I know you're
Okay,
long
yeah,
copper.
take a chill pill. Like that, yeah.
400 other people in here, and you're the only one going off about gold.
There are not 400 people in here.
Are there? That's wishful thinking, I assume.
250.
Yeah. All right. Hey, we almost hit 3 earlier. That's like a record.
Ooh,
Jesus.
that might be.
What were we talking about? This is when we were drawing lines. Like 50 people joined.
Yes. Everyone wants to know the predictions.
Everybody wants the worthless lines.
Yeah,
I mean,
the absolutely meaningless lines
but...
that we draw at the beginning of every week.
Yeah, we never even talked about my pool.
I'm pretty sure we literally, all of us, just made those lines without even thinking about anything except for Gherk, barely thinking about
I didn't put any thought behind mine.
I actually thought about
the upside line I drew has a lot of thought behind it.
I took a straight line and I fit it to the move we've been making, and I extended it out 5 days, and then I rounded it down by $25.
Genius. I thought I put as much thought as that. There's a lot of options at 5,000. That was my thought process.
I mean, ultimately, the environment is changing so quickly right now that any prediction beyond like 2 days is probably worthless.
Oh yeah.
We have massive intraday moves in positioning and all of these lines. I know. I think
Nvidia moved 10% on Nvidia moved 10% on no news.
So it just broke gamma neutral.
Yeah, you think anybody's predicting anything right now? You're probably not. You're just gonna have to play it if you want to at all. Yeah.
Yeah, I mean,
Uh,
and I've been really pushing Pickle's picks out to like deep into the futures trading before I write them up, and even then, it's like, and they've been mostly right for the last couple of weeks as far as like intraday direction. I think one day I thought it could bounce and it didn't. Like we bounced a little bit and then it failed, but like even that close, right? Like within hours of market open, I'm still like I need to see the morning data before I really have an idea. And intraday it's shifting so much that it's like, yeah, I mean, if you're not at this point of the game with vol at like 3 month vol's almost at 20, like you've got to be on top of every move in order to have any kind of foresight.
yeah, no, the
Yeah.
intraday repositioning is pretty fucking wild for sure.
This is definitely market on hard mode right here.
Yeah, we could. I
Yeah,
mean, we can say really broad things like this is bearish, and it is right. Like we're below delta neutral on both time frames. We're below the JPM long puts. Like the trend over time should skew down, but I mean the path to get there may be very very choppy.
yeah, I expect
Oh,
violence.
here's another thing, another data point that we haven't really discussed. There's been this weird quirk on QQQ, and I think this was like I think this is a real effect of some sort of interest rate sensitive positioning in the options chain, that the risk-free rate as assumed by the options on QQQ plummeted at the beginning. Like it spiked a little bit at the beginning of the year and then just like started going straight down as we started rocketing up. And then by it peaked right around the end, like 321. Well, more like 313. So like right around March OPEX, it peaked, and then now it's been starting to go back up. But the interesting thing is that it's still low, and so it still has room to move. So we might have another week or two of down, just because this is springing back to reality. It got so distorted.
So you're saying buy 2 week out QQQ 400s?
Maybe. Yeah. Also, Vega exposure is collapsing on
Yeah, yeah, it
QQQ.
is. Yeah, I mean the risk there is
Absolutely
so much higher
collapsing.
because like what's the Nasdaq vol index at?
Oh, I don't know right now.
I think it's at 69,420.
22.95.
Yikes.
Yeah,
The only thing that kind of gives me pause is that some estimates of the delta exposure on SPXW seem to be indicating we're getting close to a bottom. In which case, we could be due for a a reversal, or just a return to mean, as these really heavily negative delta stuff starts to roll backwards. But again, it's moving pretty hard, so it's hard to say when it's going to just stop and turn back around.
Yeah,
I don't
it's
know.
with elevated volatility like this, the bounces, as volatility goes up, the bounces do get more and more violent. That's why I expect violence.
And it's challenging because the total delta on the SPXW has just been going up. uh, Basically since May of 2023, just up. So it's hard to tell like where the maxes and mins are relative to historical. So we could have more room to go. So yeah, I mean, everything kind of looks like we still could have another week or two of this, and that it could be enough time to just break something. So it's fun times.
Yeah, that's
I hope that
exciting.
everybody who sold puts gets absolutely destroyed.
Same, bro. Me too, bro.
Ooh, PBR rocketed again. Can't wait to get my dividend. I don't have to
Damn it,
marry
dude.
a Brazilian to get it either. It's so exciting.
All right. Well, I'm gonna go have some leftover Chinese food if we're
Yeah, I think we're done.
unless
Let's wrap
unless
it
you want
up.
to
Yeah.
talk about your friends.
I can't say any
All
more
right.
bearish shit because it's gonna make me sick.
Yeah, I'm gonna go think about something happy.
Yeah,
Yeah, like, we're starting to get to the point where, like, I mean, especially with how things are playing out, this is sort of along the lines of what I lamented to Girk on some of the late nights, like earlier in like 2023 and like late 2022. We were lamenting about basically what's happening, and it's pretty depressing. But I'm still holding out hope that the old leaders of the government do the right thing at some point.
I have no hope, but I have a toy Jack in the Box on my bookcase, and I'm just gonna sit and just spin that all day. Yeah, and just it pops, and I'll smile a little, and then I'll stuff it back down, and then just start over.
Oh man.
Sounds good.
Oh,
Yep,
it's about how I feel too. I'm gonna play video games and trying to think about it.
yep. Kirk has no
All
hope. He
right.
has a hedge. I do have a hedge. I'm
See you
definitely fucking
guys.
hedged.
See you
If
guys
there's
in
one
2.5
takeaway from
hours.
all of this bullshit, hedge the upside out of the money. Because if this
Yep.
reverses, those will print hard as fuck.
Yep.
Oh yeah.
All right.
All right,
You guys have a good one.
you too. See you
See
guys
you in
later.
two and a
Thanks
half
for coming
hours.
on.
Thanks
Yeah,
for
see
having
you
us,
in
bud.
2.5 hours.
All right.
Later.
Here, guys.
Take care.
All right, guys. Thank you so much for tuning in. I will have Pickles picks out a little later tonight once I have some time to review all of the data. If you have any questions, I'll be around for the rest of the day. Feel free to reach out. I'll try to answer them where I can, and I'll see you guys bright and early for market open. Should be fun. Thanks, guys. Have a good night. Later.